When Congress passed the CARES Act on March 27, 2020, there were special provisions that meant to help students with qualifying loans. In this video, we'll go over key student loan provisions in the Act, who qualifies, and what to do if your student loan doesn't qualify. First, let's go over the main CARES Act student loan provisions. First and most significantly, the CARES Act offers payment suspension on federally held student loans from March 13, 2020 to September 30, 2020. Payment suspension began automatically for qualified borrowers and requires no action on the borrower's part. Moreover, if you make a payment on a loan after March 13, 2020, you may request a refund. But if you decide to continue payments, they will be fully applied to the loan principal. Interest waiver. Interest will not occur on federally held student loans from March 13, 2020 to September 30, 2020. Interest is automatically set to zero and also requires no action. Those that are able to continue payments can take advantage of the period of zero interest and can pay down their loans faster. Collection suspension. The CARES Act suspends all collections of federally held loans that fall into default, which includes tax seizures, wage garnishments, seizure of Social Security benefits, and any other matters that would fall under involuntary collection until September 30th, 2020. Credit reporting. A student borrower's credit will not be negatively affected due to payment suspensions and during the relief period up until September 30th, 2020. Reporting would show as if the students made their regular payments. Payment suspension versus forgiveness. It's important to note that forbearance or suspension of payments is not payment forgiveness, which would mean that your loan would continue to be whittled down even though you are not making payments. Rather, payment suspension is simply like hitting a pause button. However, you will be eligible for payment forgiveness if you're currently in an income-driven repayment plan and you're a qualified borrower participating in public service loan forgiveness. If you meet the criteria of these programs, each month of suspended payments will count toward loan forgiveness, as if you had made a payment. But who qualifies for these relief measures? The unfortunate side of the CARES Act is that millions of student borrowers will not qualify. At this time, only federal loans owned by the Department of Education are bound by the provisions set forth within the CARES Act. But the good thing is that the majority of student loans fall under this umbrella. Covered loans include direct loans, FFEL loans or Federal Family Education Loans, and Federal Perkins loans. Loans that aren't covered include private loans, commercially held Perkins loans, and any other non-federally held loans. What are my options if my loan isn't covered? Non-federal lenders aren't required by law to allow payment suspension, but some are doing so on a voluntary basis. If your loan is not a qualifying loan owned by the Department of Education, reach out to your lender to discuss your options. It's important to speak with your lender as soon as possible, as they may independently allow some of the provisions listed in the CARES Act. Were eForms the biggest database of legal documents?